I don't know about you, but the 13F filings are one of my favorite things to look at, especially to find stock ideas from investors who are much smarter than I could ever be, probably. And I noticed something pretty interesting in the latest 13F. Many investors like Michael Burry, like Seth Klarman, and many others have actually opened a position in Alphabet or Google stock. So I thought, why not make a quick overview over the company, the business model, some of the financials, and the upside potential to determine if Google is such a buy that everyone is buying it, or it could be maybe a value trap and we should maybe wait for a better price. Now, looking at Google stock itself, it got beaten down quite a bit actually. It was trading over $3,000 a share in the start of the year, and now it's sitting at $2,300 a share. And if we look at the valuation of Google, just looking at the basic PE ratio, it's around 20 right now, which is pretty low for Google. And if we look at the history of the company, this is one of the lowest times it ever traded. The last time it traded around 20 was in April 11 of 2012. So it's been a very long time. And looking historically, whenever you bought Google anywhere around this line between the 18 to 20 range, you did actually pretty well in the years to come. Now, looking in a little bit deeper for the revenue sources of Google, one of its biggest revenues, of course, is Google Search, which we all know. But I'd like to show you a pretty interesting map about Google Search dominance in the world. And you could see from 2012 to 2022 the kind of moat that Google Search actually established around the world. And this is the kind of companies you really want to be into in times of uncertainty, a company with a wide moat like Google, a free cash flow machine, and a company with an amazing balance sheet. Now, looking at another important source of revenue is actually YouTube ads. Now, there's a pretty interesting thing about YouTube ads. And this is that many other companies, they got really hurt because of the Apple privacy changes. When Apple put the privacy thing, Facebook got hurt a lot. Many other kind of companies got hurt a lot too, but not Google. Google got affected, but not very much. Mainly because Google collects its own data via its search traffic and YouTube. So it has been less affected by the iOS changes. The company brought in $8.63 billion in revenue from YouTube ads in the fourth quarter alone. That's pretty amazing. So Google actually has an edge to fight against the privacy changes that Apple currently have and any other potential changes that Apple may make in their devices. So Google is doing pretty good on that. But there's a pushback on this. And this is a kind of consumer behavior, you could actually say, or the consumer preference. As you know, TikTok has been kind of taking over a lot of companies. It has been taking market share from Facebook, from Instagram, and even YouTube is getting hit by this as well. And the scary part is they've done a survey which asked people 13 to 34, what is your favorite app? 31% they said TikTok, and only 28% they said YouTube. This is the first time ever TikTok ranks above YouTube. Now, yes, TikTok is affecting YouTube from one way or another, but I don't think it's such a big threat as people make it. Mainly because TikTok has its own niche, which is smaller and shorter video. It competes more with the stories on Instagram or Snapchat, in my opinion. But something like YouTube kind of has its own moat because it's educational content, 5 to 10 minutes type of videos, even 20 minutes or longer. TikTok doesn't really have that. And if TikTok actually tries to take market share from longer videos like YouTube, I don't personally think that TikTok is gonna be successful at it. Now, yes, that's a big threat, but I don't think it's as big as people make it. Another risk actually with the YouTube ads is because we may have slowdown in the economy, and whenever we have slowdown, businesses are less willing to put kind of ad money, which brings the ad revenue down for YouTube. So the YouTube ads might come down actually in the future if we do have a larger extent of slowdown in the economy where businesses don't really want to spend a lot of money advertising. But Google Cloud is the third biggest cloud provider in the world, right after Amazon Web Services, which is number one, and I think it's gonna be number one forever. And then you have the Microsoft Azure, which has 21%, and then you have Google Cloud. And most of Google's revenue in the future, I think the growth, is gonna come from Google Cloud, mainly because the main business is very mature, but the cloud is growing 40% a year. And eventually in the future, this component is gonna be the free cash flow machine, just like Amazon Web Services is for Amazon. But this is not all pretty and not everything is fine. There are some risks with Google. And this is something on their latest earnings report, which I didn't personally like. I look at the revenues. The revenues, they grew around 13 billion, which is pretty amazing. But then I looked at the net income, and it's down around 1.3 billion. So they grew 13 billion, but the net income declined 1.3 billion. And I didn't really like it at all. And I noticed it was mainly because of cost and expenses going up. Again, we're seeing it with companies like Walmart. They're facing kind of a lot of labor costs because employees are demanding wages. This could be one of the reasons why Google had so much increase in expenses, because their employees demanded higher wages, or maybe also because they are investing in cloud and many other kind of research and development, which grew over 1.8 to 1.9 billion in investments. So this also had to do with the decrease in net income, but I didn't personally like it at all. And I'm gonna be monitoring this change in the upcoming quarter. And Google has a pretty amazing balance sheet, over $135 billion in cash. That's an amazing cash position. If we do have anything go wrong in the stock market or anything, Google is gonna be there to pick up amazing deals when there's blood in the street. And it also has a pretty large buyback of $75 billion, which is around 3 to 4% of the entire market cap is gonna be bought back through share buybacks, and this is an amazing way to reward shareholders. But as you know me, it's not what we buy, but how much we pay. So now we're gonna take a look at my valuation model on Google to see if we're paying a fair price or we should maybe wait for a better deal. So Google made $257 billion in 2021. They're gonna grow around 15% this year, but I don't think they're gonna keep growing 15% forever. Therefore, I put their growth expectations declining at a steady pace to 13%, 12%, and then 10% by 2026, which I think you guys can agree with me on this. Now, if that all comes through and I use the same net income margin, which they have right now, around 25%, this is over 113 billion alone in net income by 2026. Now, using a PE of 25, and many of you may ask, why have you used a 25 PE if Google in its history traded at a mean of 32 PE? Yes, that was very high, but Google was growing like 15, 20, 25%. But as you guys know, Google is not gonna keep growing this much forever. So for me, between 20 to 25 PE is fair value for Google growing between 8 to 10% after 2026. This would give us a $2.8 trillion of valuation. The current valuation is $1.5 trillion. That would give us around an 89% on the upside, or 14% compounded every single year for the next 5 years. Now, this is pretty amazing for a company like Google. But I don't personally think Michael Burry is gonna hold it for the next 5 years. Maybe other investors will, but I don't think Michael Burry is doing that. I think Michael Burry is buying it actually because maybe Mr. Market made a mistake and the stock sold off more than it should. And maybe whenever it gets back to 25 or 2600 after maybe posting a beat on the second quarter, although they may miss, and I think they might miss if the ad revenue goes down. But if they do post a beat on revenue, the stock is going to be between 25 to 2600, and that's a quick profit on Michael Burry style. I don't think he's going to hold the stock for the next 3 to 5 years. But if you do want to hold the stock for the next 5 years, you're pretty much going to double your money, maybe a little bit more, including the buybacks, and it's a pretty good return with a safe stock like Google. Google is not going anywhere, and it has a pretty amazing balance sheet, so you can lock in a 14% every single year for the next 5 years. This is not bad considering the risks you're taking with Google. So I think if you want to open a position, I think now it's a good time to open a small position and maybe dollar cost average down if the stock does come down. Of course, none of this is financial advice, but again, I thank you so much for watching. If you liked it, please press the like button and maybe consider subscribing. So I hope to see you in another video.